So before we get into these individual names you picked out for us, just talk us through the case for small caps in general at the moment, because the argument has been made many, many times, whether it's on valuation discount or anything else. And I guess that multiple gap has not closed.
Yeah, I mean, small caps should do well coming out of any sort of recession. So whether we have any sort of light recession, et cetera, I still think they have an opportunity. But what I think in general is that you're going to get some more market breadth. I mean, this last month, we finally saw about 40% of even S&P 500 companies outperform the S&P, whereas, the last several years, it's been all Magnificent Seven. So we just think there's going to be a broadening of the market, and we think money's going to go into, some of the smaller cap names. And we want to be there when, some of our, great companies that are trading at reasonable prices, have some of this influx of capital.
So let's go through these names that you've picked out for us today. Firstly, IDEX Labs. What do they do and why now?
Yeah, so IDEX, this is just simply a play on people absolutely loving their pets. So, everybody just will spend whatever it costs to take care of their animals. And so, it's a great razor blade business. They sell analyzers to vets, and then they also sell all the diagnostic testing. So when I'm bringing my cat Manny or my dog Dawson to the vet, I'm not asking what that test costs. I'm just getting it done to solve for ear mites or whatever else happens. So it's a great business. It's got very big moats around it. They're number one in all three of the business segments they compete in. So I think IDEX is going to be a good one, especially in light of the COVID puppy boom, where you had many animals, people just staying in their backyards and taking care of that. So as those dogs mature, and get a little bit older, they're going to need plenty of health care.
So, but just quickly, I mean, often if people want small caps, they're thinking they're going to get a cheap stock. This isn't cheap.
So this is fairly, I would say fairly priced, depending on how you look at it. It's also probably more of a mid cap. I mean, this is a little bit larger of a company. So I do think, given the, given the moats around this business and they're just complete dominant niche of this area, this is going to be one that's always traded at a premium, probably will for the foreseeable future, but one that I'd buy on any dip in the market.
So let's go over a really small cap, or fairly small cap, 1.2 billion market cap. Ligand Pharma?
Yeah, Ligand is basically a chicken way to play the biotech industry. They've got about 85 different partnered programs, 30 different commercial assets. And so when you think of biotech, sometimes it can be a binary outcome, a bit of a coin flip. This gives you many shots on goal for success. They had an investment in 2010 in a company called Metabasis that they put only $1.8 million in it. And, they added an asset, they nurtured the business. And then, today that's become 1.7 million shares of Viking Therapeutics, VKTX, which is worth about $140 million. So I'm sort of making an investment in the 35 veteran scientists that work at Ligand to make these incredible investments and deliver shareholder returns over the long run. And yeah, it's a very small company at 1.2 billion market cap.
And finally, you've gone for Roper today. Tell us why.
Yeah, Roper is just a collection of about 27 very cash flow rich, technology companies. Their whole business is surrounded by compounding cash flow and using that cash flow to acquire new businesses. And if you look over the last 15 years, they've returned about, for shareholders, about 2.5 times that of the S&P 500. So they'll do about $7 billion in revenue. It's a little bit larger of a company as well, but one that I think is going to continue to deliver. And in any sort of market pullback, I think this is one you could add to and feel pretty good about.